to another of our Sustained by Grace Ministries and Outreach program, where we nurture you back to wholeness and life. It is a privilege to share with you in our program today on our topic investment and incremental step to wealth. The Bible said it is God that gave us power to get wealth. But one of the power that he gave us is information. He gave us knowledge. But guess what? If we get the knowledge and we do nothing with it, then we will not gain anything because faith without work is dead. I am your host today, Ramoy Lemard. Unfortunately, I am all alone today because Marvin will not be with us. But I have two wonderful persons here with me, right? We have Miss Diane Campbell. She has been here with us before, so she needs no formal introduction, right? Diane is a financial specialist with VM Group, and she took along with her today one of her colleague, right? And he has a wealth of knowledge to share with us today. Mr. Trace Gale is a marketing and sales professional with over 16 years of cross industry experience, right? His experience spans hospitality, telecom, banking, and investment. He's a proud alumni of Kingston College, right? Right. So we are in good company, right?
Awesome.
And his current role involves aiding both corporate and individual to transform their lives through investment. So they are here today to share with us how we can use investment to build wealth, right? Welcome, Diane and Mr. Gale, to
Thank
our
you. Thank
program.
you. Yeah, man. Thank you very much. Um, uh, Very happy and pleased for you to have me. All right. I mean, I love this topic, Miss Lemard. I must say, I love this topic. To wealth. It feeds back into a quote that I once saw, not with a comparison with two persons. It's a famous movie actor, and which is a regular person. Acting over 78 movies, starred, made over $150 million, right? And he spent it all on cars and animals. Now he's broke. Regular woman, secretary who lived in a rent control housing, saved over $9 million over a lifetime, right? So she now has a wealth of $9 million. Her
Wow,
income was
wow.
minimal. She saved on a regular basis, invest and stuff like that, and now she has $9 million. So the point of this is it's not how much you make, it's how
What is
much
it?
you save and how much you invest. So that's why when you mentioned this topic, it just resonated with me and what we're here to discuss. All right. So investment pretty much is there are a lot. Before I go into investment, the definition behind investment, there are multiple vehicles to investment, right? You have real estate, which Dan would expound on later on. You have stocks and bonds, and you also have unit trust. I'll go through with those individually. So stocks pretty much is companies coming to the market to raise funds. So what they do is they list about 20% of their company. It's usually up to about 20% of their companies. And what they'll do is sell ownership into their companies. So each unit of stock you buy, you are buying into that company, right? They'll usually list from 80 cents, 50 cents was the lowest I've seen, up to any amount of money they decide that the value of their stock is worth. When you buy into these stocks, you're buying shared ownership, pretty much. All right. So with that, you earn two ways. You can earn through dividend payments. So every quarter, when these shareholders decide that okay, they've made a lot of money and they decided okay, I'm going to give back a percentage to the shareholders, and that's a way that you can earn. Another way you can earn is through the increase in value of the stocks. So just an example of what I'm talking about, last year, March, April, Fesco was listed on the market at 80 cents per share. As we speak, Fesco is trading a little bit over $6. So you can do your multiplication to understand the multiplied effect of that on your investment. So let's stick with incremental because I'm not going to quote any big figures here. Say you invested $10,000 last year in Fesco. It would have been over $60,000 right now. You understand? So that is how the stock market works and how you can earn incrementally. Well, I mean, multiple hundreds of percentage is not incremental, but you get the picture, right? So that's how you can earn from the stock market. It's a beautiful place to earn. It's actually one of the best place to build your wealth. However, it is not risk-free.
Okay.
So just as how it can multiply right throughout, the stock can have bad performance as well, because the market is driven by customers and their faith in the market. So if I don't believe it works, I'm not going to buy it. And if I don't buy it, it means that there won't be any trades going on in the market which will change the price. You understand? So if it is not being sold, then the price will fall. So when you invest, you invest $10,000, you buy 10,000 shares, which is $1 per share. If the share price falls to 80 cents, your capital will go down to $8,000. Right? It's not really lost or gains. It's unrealized until you decide to sell those shares.
Okay.
So you'll only face the loss when you decide to sell the shares. Right? So my Fesco share went to in excess of $6, even though it seems like there's profit on that. Until I sell those shares, I've not realized my profit.
Okay.
You understand? So how you temper your risk to the stock market is to take informed and advised decisions. So once you do that, once you stick close to the advisor and you stick, because we do research on every company that is listed. Once you stick with your advisor, you get informed, you get all the information you need, as you say. God supply unlimited amount of information. So once you stay close to that and you do your research, then all of these risks can be mitigated, right? So that is just stocks. So when you invest, you invest $10,000, you buy 10,000 shares, which is $1 per share. If the share price falls to 80 cents, your capital will go down to $8,000. Right? It's not really lost or gains. It's unrealized until you decide to sell those shares.
Okay.
So you'll only face the loss when you decide to sell the shares. Right? So my Fesco share went to in excess of $6, even though it seems like there's profit on that. Until I sell those shares, I've not realized my profit.
Okay.
You understand? So how you temper your risk to the stock market is to take informed and advised decisions. So once you do that, once you stick close to the advisor and you stick, because we do research on every company that is listed. Once you stick with your advisor, you get informed, you get all the information you need, as you say. God supply unlimited amount of information. So once you stay close to that and you do your research, then all of these risks can be mitigated, right? So that is just stocks. Yeah. Okay. So the thing is that on the stock market is really, you can earn, there are several ways, several different type of investors that go into the stock market.
Tell us about them.
You have the flippers, what I call the flippers. So people will buy and buy in at IPOs and then sell quickly and take gains. Okay. You understand? And they will do that throughout and just take gains and they'll continue to earn, right? There's a risk to that, right? Because some stocks in the short term, based on when they're listed. So when Fesco listed, it didn't just shoot up. It stayed at $1.20 for a good period, right? Fesco just shot up like between December and early this year. So if you had gone and sell, you would have only made like 50% on your money.
Okay.
But no gain is bad enough. So it is okay to take gains, even if it's only 50%. However, you would have lost out on an opportunity to earn more. So if your share drop, what you do now, you reach out to your advisor and you ask, okay, so Trace, what is going on with this stock? You understand? There's usually an explanation as to why the stock would have fallen. All right. So typically, before you go into it, if it's not a good stock, I'll tell you from from the get-go. Right? If it's okay, then I'll tell you to buy it.
Okay, so
I will also tell you to temper your expectations if it is not a stock that is going to move fast.
okay. So we're looking at incremental steps to wealth. And
Incremental
that's
steps.
exactly what you're saying. It's not an overnight thing. It's
Not
going
an
to take some
overnight.
time. We have to be patient, right?
We have to be
Another
patient.
thing I want to say to you, Mr. Gill. So persons that are naive or don't know much about stock should not just go and just invest like that. They should get a financial advisor.
It makes sense to get a financial advisor. How you invest in stocks now in Jamaica, you can't just buy stocks. You have to go to a broker. So that is one of the services that we offer here at BM Wealth. We offer brokerage services. So when you come to us to buy stocks, what you get free of charge along with that service is information, researched information.
Okay.
So it's not just Trace sitting there and telling you what he thinks. This information is researched. This information, we check through the financials of the company. We look at their loans. We look at their entire balance sheet. We look at, right? And then we make recommendations based on future expectation of the company, depending on what they are in. You understand? So if a company like Mailpack during the pandemic did extremely well, because Mailpack services were needed, because nobody wanted to travel, nobody wanted to go into PriceSmart. Mailpack was supplying all of those services. So Mailpack did well. All the restrictions now are free now. So what I'm going to tell you in relation to Mailpack is temper your expectations. It is not going to increase just as how it used to in the pandemic, right?
Needed.
So, yeah, so if restrictions are lifted, people are feeling comfortable again, people are traveling, people are going doing their own shopping. I mean, Mailpack will be needed less. You still have the lazy folk like me who would still want Mailpack to do my services, but it will be to a lesser degree. You understand? So those are some of the things that we discuss when talking to you in relation to stocks. So stay close to your advisor, number one.
The typical Jamaican, you would encourage them to buy stock, or is
Absolutely.
that, or is that for special persons?
No, man. You see, once you understand the risk associated, because risk is not a bad word, you know. A lot of people are afraid of risk because once they hear risk, they hear losing their money. It is
Right.
not a bad risk. It's
But
called
every businessman has to take a risk.
calculated risk, right?
Right.
You measure the pluses versus the minuses, and then you say, like, the advantages, disadvantage, you weigh them, and then you say, okay, I can do this. So I wouldn't tell you to put, if you have a net worth of you have savings of $100,000. I would never tell you to put $100,000 in the stock market. I would tell you to put a percentage, and a very small percentage, if depending on who you are. So if you're new to the stock market, try $10,000 of, say, 10% of that money. Understand the stock market now, you would want to put more in it because you see the possibilities.
Okay. But if you're gonna advise somebody who's just starting out, don't know anything about the stock, what's the minimum you think you'll tell them to invest? So say what somebody want to come in and invest, what would you recommend that they ensure that they have to start the investment?
So the investment is not a one shoe fit all, even with the stock market. It's not a one shoe fit all. Diane's net worth is larger than mine, so her starting would have to be larger, if you understand. You understand? Somebody
Yes,
is
yes.
coming in, if you have $100,000, I mentioned 100,000 because we're staying with smaller numbers. If you had $100,000 and you're coming into the stock market, I'm telling you to start with $10,000. Understand the market before you jump in. You understand? Because you'll have to get the information in order to make a decision on what to buy. Yeah. So even even for me, I understand the market, but I'm still not putting all my eggs in one basket.
Okay. And what is the recommended period you'll say they should stay in it before
So,
getting out?
I mentioned the flippers to you, but what I didn't mention to you was the long-term investments. So when you're entering into long-term investment for stocks, you have the junior market and the main market and the stock market. So the junior market comes with companies that are smaller companies. The main market would be bigger companies, right? So like Victoria Mutual Investments Limited, Grace, those companies would be main market, the bigger companies, right? For smaller companies, the mail parts, the Fescos, those new companies would be junior market. So if you are a long-term investor, what I would recommend for you, you invest in main market stocks that will pay dividends.
Okay.
You understand? Main market stocks, what they do, they don't grow very fast. But when you look at your dividend payment over time, it's very good to look at based on the number of units that you invest in.
Okay.
You understand? So the flippers will stay in the junior market because the junior market is the ones that rise and fall very fast. So the long-term investors now typically go to the main market or any kind of stock that you see longevity in. Like Fesco. Fesco is fuel, it's energy, and it's new. They are doing technological stuff. So you expect them to have some longevity. So you would want to, and I mean, depending on how long this oil crisis lasts, you want to temper some stuff. Because they're going to be making good money right now because the prices, demand and stuff is going up. So, but when that is regulated, when Russia decides to stop what they're doing, understand? Then we know we will see the real worth of the real value of Pesco. You understand? So
Yeah.
that is what happens on the stock market.
Okay.
So in relation to bonds, bonds is a little bit different. It's still companies going to the market for money, but it's not selling ownership. The bonds is more a loan. So a company decides to raise $100 million, they'll go to market and say, okay, for everybody who lends me their money, I'm going to give them 10% per annum on their funds. But these funds, these 10% are usually, the interest is usually paid over a period of time. So it's usually quarterly, half yearly, you understand? Or some annually, depending on the type of bonds. So that is more long term than stocks. It's less liquid, but it's safer than a stock market.
Less risky.
Yeah, it's less risky. But for the bonds, the amount to get into the bond, the figure to get into the bond is usually pretty high. So only my friend Dan will be able to afford these kind of investments.
Yes, then.
Not quite there just yet, but I'm on my way.
You understand?
I'm on my way.
Yeah, man. So I mean, what we do here at Victoria Mutual Wealth Management is that typically for our clients, you can buy in small. So
Okay.
to get a piece of bond, it's usually very expensive, but we take bite sizes for our clients. So
Give me an idea.
we'll buy that chunk. So to buy a block of bond, it's usually about 200,000 US. So what we do, we buy that and we sell it to our clients. So we've sold 2,000, 10,000, 5,000, and those smaller bite sizes to our clients, right? So typically what we do is ensure that we can find enough clients who will be interested, and then we will do that for our clients.
So how does the client gain from that?
No, man, the interest payment is what you gain from. That is your
Based on the percentage that the
based on the
bond is going
percentage.
for.
So you will be given the percentage before you decide to buy in. So it's a predetermined interest rate, and if it's attractive to you, then you'll take it.
Okay.
And based on the company. So if you hear VM Group now put out a bond, you're going to feel comfortable. VM Group has been around forever.
All right.
You understand? Or great grandparents used to bank here. So you know we're not going anywhere. We're not, we've not had financial difficulties. We are good. So you
Right,
will
right.
want to take that bond because it's safe.
Mm-hmm.
I will not call any other institution's name, but if you hear of other institutions, you may decide that, hey, I'm a little bit wary of them. Because if they go bankrupt, then you lose.
Right, right. So when
Yeah.
you're investing, you need to know where you're investing.
You need to know where you're investing.
Reputation, longevity, authenticity, credibility, all of those things are important.
All of those things are taken into consideration.
Mhm.
And that's why we don't sell bonds that we haven't done some research on.
Okay.
So if you come to us for a bond, the final decision is yours. However, I will give you my recommendation that I don't think this is one that you should buy now, or whatever the case may be. You
Okay.
understand? So typically, that's how we do. We give you the recommendation, we give you the information, but the final decision is up to you.
Okay. So you said the bonds take much longer than the
Yeah.
stock.
Mhm.
Give me an idea as to how long a person would have to wait before they can gain from it.
No, man, you gain immediately. What happens with the bond is that. So, all right, let me further explain how it works. So I'm listing a bond. I'm raising some fund on the market. You have $100,000. I will hold your $100,000 until the bond matures. So if the bond is for 5 years, you won't have access to your $100,000 for the next 5 years. What you will have access to is the interest payment that comes in every quarter.
Okay.
You understand? And that
Yes.
when the bond matures, you get your principal back.
Okay.
Yeah. So those are two vehicles. The other vehicle is a unit trust.
Mhm.
All right. So unit trust is basically pooled investment. So what they'll do is they'll take your money, they'll take Diane's money, they'll take my money, and we'll invest it in aspects of the market. So for like bonds, so we're unable to buy like a $200,000 bond, a 200,000 US dollar bond by ourselves. But when we pulled all those funds together, we can buy 400,000. Yeah.
Okay.
Well, when we do that, we buy into the bond market, and the interest is shared dependent on how much you put in. So I would have probably put in 10, you would have put in 20, and Dan would have put in the rest. So she'll get a higher interest rate based on the amount that she would have, an higher amount, not interest rate, but an higher amount based on what she would have invested. And that's how the unit trust work. We do that. We have different funds. We have that for real estate. We have that for bonds. We have that for equity. So for people who don't yet understand the market but still want to invest in the market, the equity fund exists, which is
Okay.
where we use pool funds to buy into the stock market, right? And we have US funds as well, right? And we have a very conservative fund that is invested predominantly in government securities.
Okay.
We also have a very diverse fund that is invested in bonds, real estate, government securities, and equities as well. So I particularly like that one because it doesn't matter which part of the market is up, we always benefit.
That's the equity.
It's called a goal maximizer.
Okay. All right.
So that's pretty much three of the vehicles
All
that
right.
that you can use.
Say a customer comes into you, right?
Mhm.
And they are juggling between the three of them. Should I take stock or bond or unit trust? What would you recommend?
All right. Earlier, I told you that investment is not a one shoe fit all. So I wouldn't
Mhm.
look at somebody and determine, okay, you are stock, you are bonds, you
Okay.
understand? It takes
Okay.
in-depth discussion. So I first
Yes.
need to assess you,
Mm-hmm.
understand what your risk appetites are, how much risk are you able to take, how
Mm-hmm.
much risk are you willing to take. Ask you a question like, suppose you buy some stocks for $20,000, and tomorrow when you look, the value of the stocks is 18,000. How would you feel? You understand? Your response to those questions determine your risk appetite.
Okay.
So if you are going to have cold sweats and fever just from hearing all
So
of that,
like me.
I would tell you the stock market is not for you.
Mm-hmm.
You understand? If you are okay, if you are going to tell, if your response is going to be that, okay, if it falls, that's an opportunity to buy more at lower prices, then absolutely, you're a stock market kind of person.
Mm-hmm.
Understand? And I would recommend you invest more of your savings in stocks than I would recommend for the next person. So in assessing someone, in giving recommendations, I need to know your risk appetite. I need to know how long you want to invest those funds for. I need to know what's your age, because that is important as well. Because a younger person, should anything happen, can recover, but for older persons, I wouldn't put, that will determine how much you put in the stock market, how much of your savings slash earnings goes into the stock market. So we look at those kind of things before making a determination. So we have to have in-depth conversations before deciding to give you a recommendation on what to invest.
Okay, so we will advise our viewers if you're interested in having stock bond or unit trust. Don't just go into, but go and speak to your advisor. They are
Most
the
definitely.
expert, they know it, and they will guide you accordingly. All
Yeah,
right, yes.
yeah, because the truth is that a lot of people want to earn a lot.
Mm-hmm.
But when they find out the risk associated with it,
They run
um,
away.
they run away quickly. So we have to give you the information for you to make the decision.
Wise decision. Mm-hmm.
Yeah.
Thank you, Trace. That was a very informative session. I just want to segue right into real estate
Mm-hmm.
and how you can use that to maximize your wealth. There are two different types of income that you can earn through real estate vehicle, and that's passive income, coming off what Trace was saying earlier, in the sense that you buy and you hold. He spoke about the unit trust. We have a real estate unit trust package, and that is where group actually owns different real estate businesses, and persons can actually buy into that portfolio, and whatever profit is earned through those investments, whether it's buying and selling of apartments, whether it's maintaining different buildings, whether it's rental income, however the company earns through real estate investments or commercial investment, then the person who buys into those stocks, they can benefit from that. And that is termed as passive income. The active income comes in where persons buy and sell. And there are multiple ways that you can earn from this, or maximize your wealth then through this medium. That includes buying property, residential property or commercial property. But for now, we're just going to focus on the residential property. So that, as I was saying, that involves buying property and maybe improving the property and selling that property. And that is also termed as flipping of real estate, whereby you buy not to hold, buy, improve, and sell. For example, you find a lovely fixer-upper for $11 million in a nice community or an ideal community, and you decide that you're going to buy this, renovate the property, change out the windows, the tiles, maybe the bathroom, modernize the bathroom, lift the curb appeal, then paint the property. And you decide that, okay, after the work that you put into the property is done, then you do a valuation to see what the current value of that property is, and you can sell immediately depending on demand. People are doing this a lot now in areas such as Harborview or Havendale. There's also the Portmore community. You have quads in the Portmore community that persons are buying cash, and they're able to improve, expand, or just give it a facelift, and then they're able to flip that in a short period of time. We find that real estate appreciation capital appreciation in real estate in Jamaica is higher. It's the highest it's ever been right now. Customers have reported that their property grew in value over 20-30% in less than 2 years because the demand is so much higher than the supply currently. So capital appreciation is another way that you can maximize your wealth in real estate. And that involves just the value of the property increasing on its own based on where it's located, based on the development in the area and the demand for those properties. So you don't even have to do any work. You don't have to paint, you don't have to expand, you don't have to change any fixtures or fittings. The property is just gradually increasing in value over time. I can give you an example of that. Everybody here, or most people, my two co-hosts, you would have been familiar with the Carbon Estates community. Those 2-bedroom units in Portmore, Bernard Lodge, those started at around $4 million in 2006, around that time, about 20 years ago. If I'm not, don't want to be quoted exactly when it started, but around that time, they were listed for that property. And if you go to that community now, those properties are being listed for 28 million, unimproved. So over 20 years, property has climbed significantly in value. And persons who first owners can benefit from that capital appreciation based on the equity that's in the property. They can sell, clear whatever loan balance is there, and buy something else, or just invest in whatever Trace has to offer at VM Wealth. So that is a sure, capital appreciation is a sure and steady way to earn income or maximize your wealth through real estate.
I know that, real estate in Jamaica, when we talk about real estate, we are talking about money. I mean, big money. So
Right.
maybe the passive income for the common Jamaican may be one of the most attractive one.
Sure. So
You want me
not
to
everybody
open-
is ready. Not everybody is ready
Yes,
to
yes.
buy a house. Remember,
Right.
when you're about to purchase a house, you're gonna need a deposit of 5 to 10%,
Mm-hmm.
right? We can use the example of $10 million. 10% of that is $1 million. And then you're gonna need closing costs, legal fees. You're buying a house for $10 million, budget to spend out of pocket at least 1.5 million, thereabout. Not everybody has that and is ready to buy a house and can afford to do that now. But where passive income comes in, you can start with a minimum of 10,000. Correct me if I'm wrong, Trace, for the unit trust real estate fund.
No, the real estate fund starts at 50,000.
50,000 Jamaican dollars.
Okay.
So instead of buying a physical house,
A
you
$15
can
million
buy,
house.
you can start with $50,000 to invest in a portfolio that is invested in real estate.
Okay.
So how these companies get the return, as I was explaining earlier, is that they own different development projects, they're buying and selling apartments, they're renting out building space or commercial space, they're earning income from maintaining these different properties, offering different services for maintenance or where real estate is concerned. So you're using your $50,000 to maximize your wealth by buying into these companies. And as I was saying earlier, VM Group, VM Wealth, VMBS, we have this offer that persons can engage and participate in.
Okay, so if VM owns an apartment, every time VM rent that apartment, the person that buys into it will gain something from it.
Right, or if they're selling. We actually own the tall building in New Kingston, the towers. We actually own the building on Nutsford Boulevard. That's where the New Kingston branch is, and BM Wealth. We own the Halfway Tree building. in Half Tree Road. That's the head office. So we own several buildings across the island, and then there's Residence of Kingston, which is a new development happening downtown, overlooking Ocean Boulevard. So we do different things and we offer different services where real estate is concerned. So the performance of that portfolio affects the investor's portfolio, so to speak.
And they get as much as they invest, because the person that invests $100,000 will obviously gain more than the person who invests $50,000. However, can you give me an idea of a percentage, like how the interest rate is calculated, if
What is
that's allowed?
Chris will answer what they
All right. So what I can tell you is that for last year was one of our, for the last 2 years, actually, it's considered to be one of our two roughest years. In 2020, we finished at in excess of 7%. And last year, we finished at 10.67%. You understand? And these were pandemic years. Prior to 2020, we were in excess of 14%.
Okay.
You understand? And so as the time gets better, you know what the time is.
Right.
So it will be 14% per annum.
Per annum.
Okay. All right.
And that was in the previous years.
Right.
Mr. Gale just said that in the pandemic years, we did an average of about 8-9%. The last year was 10%.
Okay.
2021.
So you're doing well.
10%, right. So that is very good. I mean, I do work with the Building Society, but we are not necessarily paying 10% on your $50,000 right now. If you see what I'm saying. Exactly. No bank is paying 10% on $50,000 or $100,000 or $1 million Jamaican dollars right now. So I'm just saying that to say that the earning potential is there for persons who have the appetite for that.
I'm willing to take the long haul, because that sounds like it's more long term.
It is
the longer you're in, it's the more steady the returns, correct?
Okay.
Add that the fund is very flexible. So once it makes sense for long term, you are not held long term. You make the decision of how long you want to stay in the fund.
Yeah.
So is it that they are giving back their principal or the amount they invested?
And the return.
Plus the returns.
So what he's saying is, if you do not wish to be in there for 5 years or 3 years, you're not tied to that. If you go in today and you want to come out next year same time, you can.
Okay.
So you would buy into this through your broker. Obviously that's VM Wealth, our VM Wealth representative here, Mr. Trace Gale. You can reach out to one of our wealth advisors at any time for more information on how you can earn passive income through investing in real estate.
Okay.
And the active now is when you literally get a mortgage or you do a cash purchase on a physical location. You're buying with the intention of earning income through flipping, as buying and selling in the short term, or buying to improve to sell in a medium term, or buying and holding long term for capital gain, or buying to rent, so you can earn rental income through lease agreements, long-term rental, or vacation rental, which is the famous or infamous Airbnb concept that has taken off so well in Jamaica.
So again, Diane, as I said, a typical Jamaican will not be able to buy a house by cash. How does VM help this person to gain that house?
Right. So there are 3 steps in accessing a mortgage. There is saving. You definitely need to save, because you will be responsible for the deposit, the legal fees of procuring an attorney, and the closing costs that the financial institution would charge. And after saving, then you come in to secure, or while saving rather. I don't want to say after, because I always encourage my clients, if you are not fully prepared, do not let that prevent you from starting the process. And in terms of securing a property, it means you go in to speak to an advisor about getting a mortgage pre-qualification. They assess how much you earn, how much you're spending, your net worth, everything about you, and then say to you, Miss Lamard, you are eligible to borrow this amount based on your profile. Once you have procured a pre-qualification, you can then go shopping. And this is where real estate agents like myself, see my pin here?
Yes, we
Will
can
assist
see.
you in finding a property that is convenient for you based on your budget, based on your requirements in terms of location, budget meaning affordability, location preference in terms of how accessible it is to schools or work or shopping district, and yes, safety and security. So some persons prefer gated, others are open to a developing community.
All
So those
right.
are the three steps in accessing a mortgage, and that's how VM actually comes in to speak with you about how much you're eligible for. And we're also there to hold your hand to help you to find a property, and that service is offered through VM Property Services, which I just said before, and I'm saying again, I'm also a part of that. And once you found that property, you come back to us to process the mortgage, can get an approval within 10 days of submitting your mortgage application documents. And once the mortgage is approved, we move to registering the property in your name and then paying out the loan, which you service on a monthly basis up to age 70 maximum.
Okay.
Yeah, as I was sharing with the viewers and my co-host, the example of Bernard Lodge development, the infamous Scarven Estates, it is close to my heart because I'm like, wow,
Why
every day I'm
didn't you
like,
buy the
what?
house there?
Well, at that time I could not afford it, fresh out of college. Fresh out of college paying student loan. I couldn't afford a house. I didn't think of owning a house at that time either. But we see that home ownership is now
Right.
easy, yeah, more accessible because the government is lending more. There's more information that's out there now for young professionals that they can tap into. So it doesn't seem so difficult. It's mostly about managing your expenses and your spending patterns to ensure that you're on the right path. You remain an ideal candidate that the bank can offer financial aid to or lend money basically.
Right. That I noticed too then is that when there's a development, the houses sometimes it's good to get it when they started because it goes at a cheaper rate than when it appreciates
Mhm.
over a period of time. Right? So if persons who want to invest or purchase house, it's good when there's a development going on that you get in early
The
and get that
pre-construction
house.
phase,
Right, and get
pre-construction
buy a
prices.
lot. Right. Because you get it much cheaper then. But there are persons then who may not be able to buy a house, but let's look at a person who already own a house, right? Maybe they need to improve it, maybe put on a room, paint it, fix it up, but and VM can help them maybe to get a loan or something, or to improve that house and maybe earn some money from it. Can you give us some advice on that?
Of course. So persons who are already homeowners, maybe through inheritance or by other means, they can access a home equity loan to do home renovations through VMBS. And what that process entails is us looking at the current value of the property, the collateral itself, examining the state of the building, the age of the building. We're also looking at the present value and the future value after your home improvement project is complete. And we can lend against that amount or the existing equity in the property. Not because you're a homeowner, Ms. Lemar, means that you can access a loan. A lot of people think that, oh, I have a house, so why
Gotta
not
get
give
a
me the
loan.
money? I mean, you can hold a house. That's not how it works. We're
Right.
not in the business of collecting homes. We're in the business of making you, empowering you to fulfill your dreams of becoming a homeowner, generational wealth for your children and your children's children. So we don't want to lend you money
To take away
knowing
my
that you
house.
will not be able to service the loan at the risk of you losing that investment. So there are certain conditions, certain conditions that has to be met, and there's a rule for the investor. And that means that they need to be earning enough income to service that loan through a steady source. They have to have a good credit history. They would also need to be of a certain age, because if you the more mature you are, you have to repay. I've seen situations where people come to borrow against their home, but they are a little bit on the mature side and they're not able to access that loan. Right? I'm being politically correct. So having youth on your side it helps. So I'm not saying that if you're of a certain age you can't access the loan. It means that you have less time to repay, and that makes the monthly payments a little bit higher than if you were of a younger age. And what we don't want to do is to have you going into retirement with this large obligation, financial obligation. I've met a lovely couple from a rural community. They're professionals. One is a medical doctor, one was a principal at a college. And they built their dream home in a nice retirement community, large house. But the practice of persons from rural community who typically build out of pocket, they don't normally insure, because that is not something that a lot of people know about from those areas. So they didn't insure the property, and there was a fire, and the lovely house got burned down. And this happened when they were in their late 50s, close to retirement. So they went to a financial institution to get a mortgage to buy a 2-bedroom house in the country, right? So they were eligible because they were still working, but the financial institution extended the mortgage until after retirement. Based on their profession, doctors can still work after age 70. I met them, and at the time that I met them, they were distraught because the monthly payments were so high, and the income that they used to earn in their 50s, they're not earning that anymore. So they were a little bit distraught about that. So it is quite important for persons to consider the full picture while they are preparing for home ownership, and don't wait until you feel like it or until all the conditions are right. Put the different things in place now, so that when it's time to retire, you're comfortable, you're not retiring with this large mortgage. I also want to give a good example of a flip. I want to flip that situation around. There's another example of a couple that I met. They got their mortgage 6 years ago. And their mortgage expires in 2048, but they are this close to closing that mortgage. They intend to close that mortgage this year. They're like, we don't want to go into retirement with this thing hanging over us. And they're not rich. The lady shared with me, she said, Diane, we make a lot of sacrifice, and we're disciplined, and we give up a lot of things because we don't want this thing to be carrying with us when we're old. This is like a burden. She put those are example words, but she said we make a lot of sacrifice, we live simple lives because we want to ensure that we're debt-free going into retirement. So they took 6 minus 20 is 4 plus 2. That's 6 years to clear their mortgage. There's a flip side, actually, where some homeowners actually have a cheap, they can rent out their house and access a rental property. What I mean is that I have a friend who owns an apartment, which he's renting out at $100,000. He's earning $100,000 per month. But where he lives is a 2-bedroom townhouse, and he's paying $80,000. I'm saying that to say, because he had that arrangement before the prices went through the roof, he's actually earning a profit of $20,000 every month.
Yes.
So he's not in that space trying to share his apartment to earn extra income, but he's decided to, okay, I'm going to rent out this place that I bought, use that money to pay whatever mortgage, and take the profit to save while I rent this place, which is cheaper. So he's not being a bum, he's just being smart about investing and stuff like that.
Okay. Thank you very much, Miss Campbell. Yes, Sir Gail. So you want to wrap up for us?
I mean, Diane touched on a lot of stuff because she spoke about the unit trust, the property fund unit trust that I was going to close on, which is remarkable. It's one of our babies. And I say our babies because the figures that we quote you in terms of the interest rate has placed us #1 performing real estate fund in the market. It's a position that we've held for several years. So when Dan tell you about 10%, a lot of people may look at that and say, oh, wow, that sounds a little bit small. But trust me, when you look at what is happening in the market, because the only way to measure interest rate and how small or large it is to compare it to what is going on in the marketplace. You understand?
Yeah.
It's standing by itself. And the fact that it's moderate, moderate in terms of risk, that's phenomenal. You understand? So before I go, also I want to mention something. I want to close with this: the 4 pillars of investment. So the 4 pillars of investment, very simple. The first one is to start now. Don't wait till tomorrow. Don't wait till next week. Don't wait until next year. Start now. The second one is be consistent. So if you decide that you are going to invest $10,000 per month, invest $10,000 per month uninterruptedly. Third, diversify your investment. You see, we mentioned several different vehicles to investment earlier on: the stocks, bonds, real estate, unit trust. You can access all of those. You're not limited to one. Diversify your investment. Ensure you also have a savings account, because it's not all about investment. Because your investment should not be something that you go back into to buy sugar, right? You should maintain your savings account. You should have in your savings account enough to cover your expenses for at least 6 months to a year. You understand? So you have to maintain your savings account. So that is the diversity that we're talking about, right? And the final pillar of investment is to stay the course. Don't go in your saving or investment to buy that Bridget sandals that you always wanted. You understand? I'm sorry, Diane. I'm sorry, but I had to. You understand? Don't go in.
No.
Don't go in your savings / investments to buy that new Adidas that just came out. You understand? Ensure that you stay the course, be consistent, diversify, and start now. So that is pretty much where I wanted to close there. And also, you understand? You can access facilities without touching your investment and your savings. You understand? We have cash secured facilities, and we have facilities where you can use your investment to get facilities, to get access to cash. And I promote those facilities depending on what you are using them for. Because if it's to buy a Bridget sandals, no. You understand? You understand? If it's to buy a pair of shoes, no, we can buy that out of our earnings or out of our other means. So we should not be accessing these facilities. But you can always borrow on top of your investment to buy some stocks. You understand? You can borrow on top of your investment to buy a car if it's needs, because the needs are different. You understand? Because if you need to go to and from work, you do need a car. You don't need a Benz. You understand? But you need a motor vehicle. You understand? So stuff like those, I support 100% borrowing for a motor vehicle that is for accessibility, not to live outside of your means. You understand? I do support a facility if you are buying a house. You understand? So I support those kind of facilities. If you are taking a secured facility, I support it for some reasons, but not all. Right? So it's not about what the monies that you can get from it, but it's the peace of mind. When we talk about peace of mind, we understand the value of that, because the dollar is not the only value here. So I wouldn't want you to say, okay, I'm this age, I think I should be driving a Benz right now. And it's not something that is needed, because that is going to interrupt your entire life. Everything that you were planning for 5 years ago will be interrupted just because of that want. And God forbid somebody scratch it, the value goes right down. You understand? So we want to pay attention to those things. And it's not, remember, the type of investment is not better or best. It's just what is better for you at this particular time. Because tomorrow it may change.
Okay. All right. Thank you very much, Mr. Trace Gale and Diane Campbell. But before we go, Mr. Gale, where can my viewers find you if they need to get to you?
All right. So you can find me via my mobile at 876-552-7128. You can email me at trace.gale@myvmgroup.com.
Okay, thank you very much, Miss Diane.
Yes, I'm also going to give out my email address. It's Diane, first name DIAN, .Campbell, CAMPBELL, @myvmgroup.com. And I may be reached on my mobile phone at 876-361-2415. That is also a WhatsApp number. And I do respond to messages as well. So you can email, text, or call any of those contact information right there.
Thank you, Mr. Gale.
I was sharing my Instagram handle. I found it. So it's wealth_makers. So it's WEALTH_makers with a Z. So it's MAKERZ. Right? Wealth_makers. You understand? I make people wealthy.
Good to know.
Thank you very much, Mr. Gale and Miss Campbell, for being here with us. I'm sure my viewers will be contacting you, as they have given us a wealth of knowledge that you're going to put in action. You're not going to sit on the knowledge now. You're not going to put it in your pocket, right? You're going to act on what you have learned and go forward and make some money, because all of us need some money. Time and life is getting harder, and we need more than the little that we are earning. It has been a good day, and it was good having you guys with us another time, right? And remember, our viewers, you can always go to www.sustainedbygrace.org to find out a little more of what we do. It is our pleasure to serve you, and we are here to give you as much information as we can. God bless you. See you next week, same time, same place. Put it in your pocket, right? You're gonna act on what you have learned and go forward and make some money, because all of us need some money. Time and life is getting harder, and we need more than the little that we are earning. And it was good having you guys with us another time, right? And remember, our viewers, you can always go to www.sustainedbygrace.org to find out a little more of what we do. It is our pleasure to serve you, and we are here to give you as much information as we can. God bless you. See you next week, same time, same place.